If you have any questions while we move along, please feel free to put your comments in the chat and we'll address those. Bob and I will get those addressed as we go through the class. Can you talk about cash out refi loans for the primary residence, please, such as criteria, requirements, et cetera? That's from Sean Barton.
Yeah, Sean. So on the cash out refinances, if it's your primary residence, you're going to be capped in the state of Texas to 80% of the current value. So keeping it simple, let's just say you have $100,000 value in the home today, currently on an appraisal, then that's $80,000 is going to be the max loan amount we can allow to give you. And then we have to obviously back out what we're paying your current mortgage. So if you didn't have a mortgage and there's $80,000 sitting there that could be cashed out, and then whatever costs that are associated with the cash out refinance could just come out of that $80,000. So there's still going to be costs, just like when you purchase a home. There's just not a down payment. So there's going to be appraisal costs. There's going to be some title company fees, title policies, depending on if you want escrows or not escrows. You'll have the option of choosing that because you're going to be capped at the 80% number. And then whatever that cost is, then that would come out of that $80K, and then you'd be able to get the remainder of that paid to you at closing. But the state of Texas is capped at 80%.
Yeah. Hey, Bob, I want to ask you about the cash out refi. Can you count the rental income as part of income to do cash out refi?
Yeah. So, well, if that's part of your income that you're getting every month, then it's going to show up on your Schedule E of your tax returns, and we'll utilize that as income in qualifying. Now, if you're trying to do a cash out refinance on an investment property, then you're going to be capped at 75% loan to value, not 80%. Okay, so I'm not sure how you're answering. So if it's an investment, it's capped at 75. If it's a primary, it's capped at 80. But regardless, you're going to be able to use rental income so long as it's reporting on your most recent tax returns and it's reported as Schedule E income.
Gotcha. Okay, thank you.
Thank you.
And then will folks take a forbearance be in a higher risk category?
Yeah, so I mean they are. I mean, that's something that lenders are going to start looking at is, are they? I mean, because if you're in forbearance right now, I mean, you're not going to get. It's going to be very difficult to get into another loan immediately, because they're going to have to make sure that they're outside of forbearance and they're being able to make their payments, because that's what lenders are worried about is clients' new loans being done, and then those individuals immediately asking for forbearance again. And then the lender's on the hook for, making all the payments, principal, interest, the property taxes, homeowners insurance. I mean, as a lender, we have servicing entity, you have to make all those payments and distribute them out to your bondholders and what have you. And if you're not taking any income, that's what the challenges and concern is for servicing companies. That's where they can go upside down. Now, the government and they have stepped in and they have provided liquidity for a lot of those servicing companies. So there is some relief out there, but not to the level that they're most concerned about, because they're sitting at roughly almost 8% of people going into forbearance. If that hits 20%, that's going to be a big number. So there is some concern with that, yes.
And then he asked another question: how does it show up on? Does it show up on a credit report, or how does it show up on a credit report?
We have not seen that yet. That's something. I mean, we haven't been pulling credit reports with people, and we don't know if it's going to be reported that it's going to be in forbearance. That's stuff that we'll have to see. I know that we're doing affidavits, so we're having an affidavit be signed by clients that state that they're not in forbearance. They're not going to also close on the loan immediately, request forbearance. So right now, it's just we're trying to do our little due diligence on our end as the mortgage company and servicing company, that we're just trusting the client to tell us.
Do you think the lenders will soon put in a guideline like for foreclosure or bankruptcy as having to be out of your forbearance for 1 year or 2 years?
If anything, I've heard talk about 6 months. I haven't heard it for a year or two. I've heard it for 6 months. Nothing has come down the pipeline to tell us that's exactly what we have to do. But there has been talk. And I think a lot of it, guys, is just really how long is this going to last? I mean, if we're in and out and people are in, and the economy is starting to turn a little bit and we see, businesses are open, people are spending money. I mean, there's a lot of stuff we still have left to figure out, because while the state starts to open, are people really going out there? Are people really spending the money? Are people really trusting it to go to these type of environments? We don't know that quite yet. So we're not certain as to the impact it's going to have on jobs being, people being hired for jobs and being able to get out of those forbearance areas to be able to then take on new loans. We don't know what that is, but I know there's definitely been talk for 6 months.